Right, well, measured risks. That's how Wesfarmers CEO Rob Scott sees the new investments he's making in digital for all his retail, Bunnings, Officeworks, Target and Kmart, but also investment in the electric vehicle space. He's buying lithium miner Kidman, and he says his battle for rare earths miner Lynas is unfinished business. Kmart actually issued a second profit warning on Thursday and shares dropped 5% on the day. I asked Rob Scott about the tough retail market.
Well, Tiki, I think at the moment there's a lot of uncertainty about the economy and particularly around the consumer and consumer spending. We've seen interest rates come down recently and we've just had the election, the federal election. I think everyone's waiting to really see what happens next.
People were hoping that actually that fall in interest rates would deliver a better consumer confidence read, but it didn't. Did it?
I think that's right. I think people were expecting a stronger bounce back. But the reality is that the economy is very complex, it's multidimensional, and it does take time to actually put in place the settings that will encourage growth, encourage greater confidence at a consumer level. Our businesses are in pretty good shape. We've got great businesses, good strategies, across the board. We benefit from the diversification in the portfolio, but as signalled yesterday, there are some areas of weakness, notably the Kmart Group.
Yeah, well, that of course, that was your second profit warning, I think, this year. If the retail market continues to be this soft, can Target, for example, stay in profit, do you think?
Well, look, we think so. We think there's still a lot more that can be done, but there's no way of shying away from it. We can't shy away from the fact that economic growth and consumer spending really impact our businesses. So if we were to see a continuation of the very challenging conditions, then clearly we'd need to look at alternative strategies to ensure our business could be sustainable going forward.
So harder on cost cutting, presumably?
I think harder on cost cutting and just reflecting more on our space. One of the biggest costs for a retailer such as Target is the amount of space we have. And the property is expensive, and we'd need to keep looking at optimising the network to make sure it's fit for purpose.
Rob, your other priority at the moment, underpinning all your retail, seems to be work in digital. Bunnings is going fully online, and I understand it by the end of the year. You've just acquired Catch. Now, what's the thinking behind how this is all going to work for you?
Well, our passion and commitment around both data and digital is driven by a number of things. There's also a fantastic growth opportunity that we see to leverage our assets across Wesfarmers and invest more in digital e-commerce platforms to really be a disruptor in the market rather than the disrupted.
So you've got Catch's marketplace business model. Could the consumer, for example, see through an enlarged Catch offerings up from Officeworks and Bunnings and then potentially combining that with Flybuys? And I mean, could it really become one great big marketplace?
Well, I think, as you say, there are a lot of possibilities, a lot of options, and that's what makes the Catch acquisition quite exciting. First and foremost, we're excited about acquiring a team which is a high calibre team, very entrepreneurial, tech-savvy team, and I think we can learn a lot from Natty and the team at Catch. Hopefully they can also benefit from us. Now, it's too early to decide exactly what we're going to do. We'll wait until we get the ACCC approval, get the acquisition over the line, and then we'll work with the Catch team to develop the plans. The
electric vehicle market, you've had a tilt at Lynas. You are now going ahead with Kidman. What's your vision there?
Well, we think there are some really interesting opportunities around the electric vehicle commodity space, and these are opportunities that I think Australia as a nation can really seize. We have the benefit of having some high-grade lithium deposits as well as other commodities that are important in electric vehicles. And in addition to that, we have the chemical processing capabilities, particularly in our chemicals
So you see Kwinana becoming quite a hub?
I think Kwinana could become a hub, and I think it's one of these arguably rare opportunities for Australia to really get in on the value-added processing.
Is government doing enough to, trigger that sort of investment, do you think, from Australian business?
Well, I think the West Australian government needs to be congratulated on the work that they have been doing to try and encourage investment in this area and to establish the settings to support investment. So examples of that, over many years now we've had a natural gas reservation policy which provides access to the supply and well-priced natural gas that we can use for value-added processing.
That's $3 versus $10 over east.
Not far off.
Yeah,
not far
or
off.
whatever it is.
And that makes a big difference. And then the other thing is just really trying to cut through all the red tape. Clearly there are some challenges around energy policy on the East Coast. There are challenges around access to competitively priced gas, also challenges around power prices. And certainly that would make it very difficult for us to justify a significant investment in new capacity.
Rob, you might have a bit of a challenge, though, with this zero emissions threat coming from the West Australian EPA. What do you think is going to happen there?
Well, I think that's a really interesting one, and I think those types of targets can be quite damaging, not just to the economy, but I think they can be quite damaging to investment that will ultimately be in the interests of mitigating climate change. So if you take this example that we're proposing to invest in a lithium hydroxide plant, which is a significant investment, will ultimately help the world with ultimately climate change, but the fact of the matter is that there will be carbon emissions produced through that process. So our approach and the way we think we should adopt it as a nation is to really focus on emissions intensity, do everything we can to reduce emissions intensity, and yes, set targets for reduction, but for us to just say, no, let's not invest in lithium hydroxide technology, we are missing a big opportunity economically, and I think a big opportunity to help mitigate climate change.
The rare earth space. Now, Rob, you obviously had a tilt at Lynas. Unfinished business?
Well, we are interested in the rare earth space, and what is interesting for us is that the chemical processing aspects of it, it requires a lot of capital, it requires the expertise there, and we thought this would be a good fit for Lynas and for Wesfarmers. Now clearly there's a long way to go here. We're still waiting to understand the regulatory circumstances and licensing conditions that would apply for Lynas.
But you'll have chaps down at the mining club this coming week, will you, listening to Amanda Lacaze talk about her developments?
Well, look, we're monitoring the situation. Ultimately, the Malaysian government needs to decide what they want to do with the licence renewal, and we're optimistic that there should be a positive outcome there, but we really need to wait and see what happens there before we could comment any further on our proposal.
So I guess this is the question. I mean, no regrets, you say, about going up to Malaysia lobbying President Mahathir. But doesn't his already sort of change of heart on the licence, perhaps saying it's now going to be okay, just show how risky this whole thing and messy this whole thing is? And what are your investors saying to you?
Well, firstly, our investors like the fact that we are being disciplined and opportunistic around where we allocate our capital. Just to be clear around this particular process, we introduced ourselves to the government as any potential bidder would need to for such a strategically important asset in another country, and that was entirely appropriate. What I guess we're seeing play out at the moment is the political sensitivity of rare earths, not just at a Malaysian level or an Australian level, but I think globally. There's a lot of speculation, a lot of hype, a lot of interest in the implications of trade wars to issues such as rare earths and other commodities.
Yeah, so if that trade war was resolved, the Lynas share price came down, it would start becoming more interesting for you again, yeah?
Well, it certainly would. It certainly would. Look, there's a lot of speculation out there in the EV space generally, and that's not surprising given that it is a developing market. But at the end of the day, Wesfarmers is a long-term investor. We don't invest on speculation. We don't invest for a short-term, quick turn of profit. We invest for the long term, and this is a capital-intensive industry.
Can I ask you finally about investors, because the big investors, when I spoke with Richard Goyder a couple of weeks ago, he clearly was slightly concerned about the independence, particularly of industry super funds. He says one of the things that struck me, I think, when he was CEO, is that these funds want independent directors. When I go and see them, they actually don't want us to be independent. They want us to do their bidding for them. Is that your experience?
Well, I think it's interesting on the issue of governance and independence that as a listed company, there is an unbelievable amount of regulation and governance that we are subject to. Frankly, it is not easy being a listed company nowadays. There are many advantages of being private. Now, in some ways the same rules don't necessarily apply around reporting, disclosure, governance, the need for independence at a board level.
Do you think there should
for some
be?
of our investors. Look, I think there is benefit. There is certainly benefit in that. A number of superannuation funds now are becoming very, very significant organisations with scale that has a major influence on the market.
And they're interested in private equity and teaming up with private equity. We've got some of them saying they'll happily take some big listed companies off the boards. Would you be concerned? Should you be concerned as a manager or a board director of a listed company?
Well, I think it's a good point you raise. At times, I guess it's important for us to understand if we're speaking to an investor, are we speaking to someone who's interested in us as an investment, or are we speaking to a potential competitor for another asset? Look, I think it's a good thing. I think it's a good thing that we have a significant superannuation industry here in Australia. I think the capital there can be put to work in a lot of really positive ways for our country. So I'm a real supporter of the system, but I do think that they need to have a similar level of governance that we as listed companies have.